Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for July 30th, 2012. This is Patrick Ceresna. As always, we start off a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. Last week we were substantially bearish based upon a rising wedge that we were suggesting that any substantial break below the 133 to 134 level could open the window for another decline all the way back down to its previous lows. But very quickly in the middle of the week, the bulls were able to hold that support line, and in a substantial short squeeze, 2 days short squeeze on Thursday and Friday, we have seen the SPY work its way above all of its highs in the month of July. This immediately neutralizes the sell cycle that we were looking to happen at this juncture. While it doesn't change our bigger picture outlook, that we still believe the months of August and September could bring about some substantial correction to the magnitude that we saw back in May, but it's probably clear now that it's not going to be starting off the levels we suggested in the way that we suggested. At this point, depending on how the market opens up on Monday and whether we see follow through, at this point a retest of the previous highs is not out of question. We could very well see retesting of those highs at that 140, 142, and subsequently from there we'd see where the market starts rolling over. The only way that the selling would become very intense quickly was if we saw what happened at the end of last July, which was that after a false start higher, some news driven selling immediately caused those spikes higher to be completely reversed and sell. So we would have to see something wipe out anywhere from 20 to even 60 S&P points in a very rapid fashion. Whether the jobs number coming out next week is the catalyst is uncertain, but at this point we do have to respect the fact that the market has broken to a higher high. Next year I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and we've seen the natural gas index for the month of July consolidate off of its June lows. Really at this stage this is creating sort of like a little sideways flagging formation that in fact has room to bullishly break out. If we see any substantial break on the upside of the natural gas index above this 101, 102 area where the highs came in at the first week of July, that could open the window for a move that could even return back to 108 to 110 on the upside after we may have seen short-term lows banged out on this index. Next year I want to take a look at the ISE Global Platinum Index, which is symbol ORE, and on this index we've seen a continued breakdown. After drawing that triangle, we've set a downside target that could be as low as $55, but suggested that because of the magnitude of the first wave of selling, that the second wave of selling could be shorter and fall even within the $60 to $65 area. Well, we have now fulfilled the shorter targets on the downside with a substantial 2-day reversal like we've seen in a lot of other markets. And while this doesn't certainly suggest that we know for a fact that the bottom in the platinum index is in, what we can say is that we're starting to reach price levels from which where we would think the bottoms would be banged out, and sort of the way that the natural gas index spent a month or two banging out its bottoms. We think that that while we don't see an imminent upside reversal and new bull market and platinum index starting imminently, we do believe that from a price level perspective, this is where a bottom can naturally start being banged out. Next here, I want to take a look at the ISE Cloud Computing Index, which is the symbol CPQ. It's a chart of its ETF, which is the symbol SKYY. And we've seen a technical breakdown in that Cloud Computing Index back at the first week of July as it pushed even to slightly lower lows. But since then, it's been chopping very much sideways. We do believe that this index will naturally correlate with the NASDAQ and subsequently the S&P 500. So with the fact that the markets themselves have not broken down recently, that to us suggests that we may have seen a short-term swing low on the Cloud Computing Index there in the middle of July. This allows this index to work its way all the way back to 19.5 and really start banging out some support lines. If later in the month of August we see another downdraft in the market, then we'll evaluate it at that time. But at this juncture, we think that it testing the upside overhead resistance is likely here. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and Index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.